So just to go over what we've covered when it comes to identifying value on a price chart and supply and demand levels. Now, a low to a high or a high to a low will indicate potential strong demand or strong supply in the future. And this is again dependent on fundamental and sentiment analysis, because that's really what will drive prices. And as long as fundamentally you have a strong currency and the data is good, sentiment can drive prices to where you want prices to basically, into a cheap area or a bargain area for you to buy. So there could be some short-term negative sentiment that will drive prices to where you want to buy a fundamentally strong currency. Now, higher lows and lower highs also indicate potentially strong demand and supply zones in the future. So also keep in mind that the angle and the distance of the move higher or lower. So if prices are making really kind of just shallow moves higher, there's really no conviction behind the move, then demand really is kind of obviously there if it's moving higher, but not as great as if prices are really kind of shooting up vertically, and that really indicates strong demand away from an area, meaning that buyers or sellers have deemed that level an absolute bargain. So or they could basically deem it overvalued depending on obviously the supply. So if price fails to make a new high or low, it could be entering a value range where the top of the value range would be considered an expensive area and the bottom of the range would be considered a cheap or bargain price area. Now, supply and demand orders. We need to understand really the order flow equation at supply and demand levels, because although we understand where a expensive, potentially expensive or a cheap level is on a price chart, we definitely need to understand the potential imbalance in orders at that level and who is buying and who is selling, and really some more psychology behind why we feel that a level of supply and demand will hold at a certain price or a certain location, right? So really, buy and sell orders can be broken down into two categories, right? So there's willing and forced, right? So there's willing buying or supply and demand, and there's forced supply and demand. Now, willing buying or willing demand or selling or willing selling can be described as traders that enter a position when they see a trade set up at a level. Traders are really consenting and enthusiastic to take the trade, right? So they are willing to put their money into the market when they see a trade set up. Now, forced buying or forced selling can be described as your stop loss being triggered or a take profit, right? So while being stopped out is obviously being forced to exit, a position unwillingly, taking profit is slightly different because, but it still falls under the same category, because traders are kind of forced or compelled to take profit in front of a level they see as potentially problematic for the continuation of their trade, right? So let me get draw a little example, right? So let's say for example you've got a move down, right? And let's say to the left of the chart, this was the only level of real kind of supply. There was no levels of other support and resistance or supply and demand, right? If traders are looking to buy anywhere down here, really the first level they're going to look to probably take profit, because they know that this area is going to be an area almost like a barrier when it comes to their price continuing higher. So they are kind of forced in a way to take profit. Why would traders take profit here? right? I mean, really only traders would take profit because of maybe some sort of risk reward ratio. But if you're trying to let your profits run, right? What traders will normally do, what smart traders will do, is let their profits run to a level where they can get obviously the most profit from the risk reward perspective, but also where there is likely to be some trouble for their trade continuing higher. So traders will be forced to kind of, sell if they bought down here, right? So obviously there are some forced selling going on at that level. Now let's look at an example of a level where we have to identify where willing buying and willing selling is potentially taking place. Now, let's start off up here. If you sold or went short, right, you managed to pick, roughly the highs, where are you likely to take profit, right? Now, a lot of traders will tend to take profit around here. If they're looking to the left and they're looking at, structures, then they would look to kind of take profit here. Now, if they went short here, then their take profit will be a buy, right? There'll be a buy order, which is one of the reasons why you do get a reaction around levels of support and resistance, not necessarily supply and demand. It's simply because a lot of traders have kind of been taught that to buy at levels of support and resistance, right? So if a trader who trades support and resistance, right, they know whether consciously or subconsciously that they really should be taking profit at this level, because they would be also the ones that are looking to buy at this level. So why are they going to hold? They should expect some sort of reaction, right, around this level of previous resistance now becoming support. So they went short. To exit, they have to do the opposite. So they have to buy. They sell, they have to buy to exit. Hence the reason why you do get reactions at levels of support and resistance, right? So also what happens around here is you get obviously buyers, right, coming in, looking at the level. So you have willing buying. So you've got forced buying going on here, right, or forced demand from people taking profit, and then you have willing buying at these levels here, right? Because traders will look for a candlestick set up at this level, and then there'll be some willing buying at this area. But the only problem is that if you're looking at it from a a value area, from a higher low to a high, we are really probably around fair value. Obviously this is a chart, and we're just doing it for the sake of the chart as far as where this support and resistance level is. But usually if you're looking at the lows to the higher low to the higher high, this would be around the fair value area, or could be slightly above it or slightly below it, right? But the principles are still the same. But what we want to do, we know that this is definitely the cheapest area. This is the most bargain of prices. So what we're looking for, and there's nothing wrong with taking a trade here, but just understand that we are not buying at the best price, right? And well, you could also look at it as well that if you believe that prices, this even down here is severely undervalued, of course, then you would take the trade and go if prices go higher. But for the sake of understanding where you want to have all your kind of ducks lined up in a row, so the best possible trade to take is, even though it's here, is really going to be down here from a value perspective. But getting back to the orders, if again you went short here, right, and you continued holding the trade, right, then you would definitely be looking to take profit around here, right? And again, we have forced demand from take profit from everyone who went short here. You also have new traders entering at this level as well, which is willing demand, right? And also you have supply and demand traders like ourselves who understand that this area here and the source of this original move is potentially a cheap and a bargain area. So you have a lot of forced and willing demand. So whenever looking at a level, try to understand who is buying and who is selling at the level, and also incorporate where you are in regards to a potential value range, right? Higher lows to higher highs, lower highs to lower lows, right? Where are you? And this would be the best price for you to actually take the trade.